This is Money Talks.
Hi, my name is Ibukun Oyedeji, President CFA Society Nigeria. Join me and a host of other financial industry practitioners for Money Talks with CFA Society Nigeria.
Money Talks with CFA Society Nigeria. Let's talk about money. Hello everyone and welcome to Money Talks. Money Talks is brought to you by CFA Society Nigeria. Smart Uzuchi is my name, but you can call me Captain Smart. Today on the program, Bina Kemenanabo, CFA, is my guest on the program. Bina has over a decade of experience in the Nigerian financial sector with expertise in credit management and administration, risk assessment, financial policy, and financial system stability. He's committed to contributing to the growth of the Nigerian economy and is driven by a passion for creating value for businesses and enabling individuals achieve their full potential. He holds a BSc in Economics and Finance from Queen Mary, University of London, and an MSc in International Accounting and Finance with distinction from Bayes Business School, City, University of London. He's a CFA charter holder and a member of CFA Society Nigeria. And this evening we're going to be discussing common money mistakes and how to avoid them. You need this one. Common money mistakes and how to avoid them. Everybody needs this lecture. So let's make welcome Bina. The man, you need to pronounce his surname slowly so you don't get into trouble. Kemenanabo is here. Good evening, Bina, and welcome to the program.
Good evening, Captain Smart. Thank you very much for having me.
Good to have you. Our phone lines are open. You can call us anytime. 0700 923 923 923. That's 0700 923 923 923. Or you can also call 0817 313 6193. Send a message to that platform actually, 0817 313 6193. Or the alternate number 0818 444 0923. So Bina, let's start from the beginning. Let's start from the beginning. So let's talk about some of these common money mistakes that people make. Can you start by highlighting these mistakes as if we were just in secondary school?
Thank you, Captain Smart. I'll try my best because I think something like this certainly should be simple enough that everybody can grasp and benefit from it. So yes, I'll talk about some common money mistakes that I think everybody or most of us are guilty of and how we can go around improving and getting better. So the first thing I would say is I'm sure most people are guilty of this, and that's not having a budget or living essentially without a budget. I think that's a big mistake because essentially you're spending blind and you're not tracking expenses. So you find yourself in a situation where at the end of the month or at some point you're wondering, oh, where did my money go? You know, somebody who has a good salary is finding looking for money to borrow to pay for essentials, you know. So that's a big money mistake. So another one I'll talk about is living beyond one's means. Now, this perhaps should have even been number one because especially in our current climate in Nigeria, you find a lot of people who are living a lifestyle that they cannot necessarily afford with their sources of income. And this is very dangerous because it would lead to what we'll discuss later as the debt trap. And lots of people find themselves taking expensive loans for things that they don't necessarily need, for spending that we would consider discretionary as opposed to essential. Now, another common mistake that we see is people not saving, not making the conscious efforts to save. If there's money left at the end of the month and you can transfer it to one account, that's brilliant. But that's actually not what we would look at and consider saving. There has to be a conscious effort to make a saving from what you get before you spend it all. So that's another mistake. Then another mistake is undertaking high interest debt. This one, I don't think we can overstate. Given our current climate, I'm sure one way or the other have received emails or text messages or WhatsApp messages from one loan app or the other, telling us about a friend or a family member who is owing typically not even a significant amount. But that's a mistake that lots of people make, that regardless of the fact that debt is good, when you want to take debt, you want to ensure that that credit is responsibly priced and is something that you can sustain. So yes, taking high interest debts, that's another trap that people find themselves in. The next I'll talk about or I'd highlight is impulse buying. This again we're very guilty of. You're going to the supermarket to buy bread and water, and then you come back and you have the whole supermarket in your boot. And again, this is something that I think we're all guilty of, because even the supermarkets are designed to ensure that there are certain purchases that you make on your way out as an afterthought, and we don't necessarily think that these things add up, but they do, and they eat into our income sources. So the next one I would say is not comparing prices, especially for significant purchases. But I think this also has value for everyday items. Sometimes you're too used to a particular brand to you don't even understand that there may be another brand that would give you the same quality, the same value, the same good, but for a lower amount, so that you can end up saving money just by comparing prices. But again, it's something that I think a lot of us are guilty of. You're used to Nestle, or you're used to whatever other brand that you're used to, and then there's always a cost to switching, also we think. Then another thing, I think this is actually very important, especially for young career people and people in salaried employment, is not properly saving, or rather I would say planning, because it's more than just saving, but not properly planning for retirement, for a time when you're unable to work with the same vim and at the same level that you're currently able to do. And that's a common mistake that we find people making all the time, and I think in this day and age is something that with a little bit of education we can get rid of. Then the final thing that I would highlight is not seeking financial advice. Now, there are professional entities that can provide this financial advice. I understand the cost implication of that, but again, it may not necessarily be from professionals. It could just be from more experienced colleagues, older family members, just so that you're not repeating the same mistakes of the past. Education is good, financial advice is good. If you can get professional advice, sure. But then any advice from anybody who's more experienced is very, very valuable. But then you find that a lot of people don't seek advice before they make certain financial decisions, and that is something that is a mistake I think people make.
So Bina, I'm going to have you go over these common mistakes one after the other. So as I call out that particular mistake as you have highlighted, you just throw a little bit more light on it. When you say living without a budget, what do you mean?
Okay, thank you. That's a very good question. Because again, sometimes there are things we'll take for granted. You say budget and you assume everybody knows what that is. But with a budget, I'm talking about a systematic way that you can track the amount of money that you receive as income from all your sources, as well as how you spend that money. It's very important to do so, because if you don't, as we know, there are certain expenses that are essential that you must make. You must find money for food, you must find money for rent, and all these things. You want to ensure that your income is going to those primary sources. But a lot of the time you may get segued for one reason or the other, whether it is, okay, you've just gone out with your friends to have some drinks, and then they say, okay, this is the contribution, this is the amount you're supposed to pay. Or maybe somebody comes and the person says, okay, there's a wedding, and then there's an ashobi you have to purchase. You don't think about the fact that, okay, you don't even necessarily know how much this is with respect to your total income. You just look at your account balance and you say, I can make this payment, and you swipe and the money is gone. Whereas you lose sight of the fact that the money you're using to pay for that is actually money that you require for essentials. So that's it. A lot of people make this mistake because they live without a budget. So it's something that budgeting will help you track your expenses, track your income, so that somebody who has a good job is not seeing themselves borrow money to pay for petrol or to pay for food or electricity or something that's considered essential.
And then the second one here is under saving or not even saving at all, which is very prevalent now, because some persons will tell you maybe person will get money to save. The money is not even enough, not to talk about saving.
100%. I completely agree with you when you say that. Not saving, I think, is definitely a big mistake, but there are several reasons why people make this mistake. Now, certainly where you have a situation where the money is not enough that you can even have a saving, the first thing is to look for ways to increase your income. Whether it's an odd job here and there, for people who have 9 to 5s, you may even have a proper corporate job, but then you find ways to augment that income. There are people that we have known who would undertake odd jobs, like if they have a car that they drive to work on their way home, they pick some fares on Uber or on Bolt, stuff like that. So, but I think when I'm speaking about not saving in this context, I'm talking about for those who actually may be well off enough to save, but then do not save, and this happens for several reasons. But the reason why it's a big mistake is essentially, if you don't save money, you're saving money for two things. So you're saving money that you eventually invest and try to grow your wealth, but it's also very important that you're saving money for emergencies, right? So if I talk about the first one first, saving money for emergencies, nobody expects or wants negative things to happen. Nobody prays or plans for it. But then, in fact, we're not even saying negative things like with regards to medical expenses or something like that. It could be something as mundane as a home maintenance. Your AC has broken down in the house, or your car has broken down. If you don't have money on you, so if you don't have an emergency fund where you can draw down on, you find yourself borrowing, right? And we end up in that debt trap that we speak of. And then there's a cycle of you making money and all the money is going back to creditors, loan apps and what have you. So that's why it's very important to save. But then a lot of people aren't in that habit of saving. So I think, yes, it's something that people need to imbibe, so that you're not working and then at the end of the month, at the end of the year, you're asking yourself, what am I actually working for? There's nothing in your bank account. You have no investments planned. Or lined up rather, and then you're creating value for your employers, but then you're not doing that for yourself. So definitely not saving, I think, is another mistake.
So let's talk about bad credit habit. When people take too much debt than their income can sustain.
Yes. Okay. So I've spoken about not saving, running into emergencies that sometimes necessitate borrowing, right? So borrowing and taking on debt by itself, it's not a bad thing. As a matter of fact, sometimes debt can be very good because it can provide that leverage that you need to spur on a business or another productive venture. So the problem is taking on too much debt and then taking debt for unnecessary discretionary expenses. People who take on debt, it's their birthday and they need to buy food and chops for their colleagues, or they need to take their friends out to drinks. That's not a good reason to get into debt, regardless of whether even the debt is affordable. It's not a good reason to get into debt, because that's the spending that you don't necessarily need, especially for somebody who is conscious of managing their money and growing their wealth. So again, so that's for the debt that you don't need. Now, when you do need a debt, it's also important that you're taking responsible credit. You're looking at the entity, you're looking at the price. I know that's another problem we have in Nigeria. People say, typically loans and credits are too high and too expensive, but then there are even those that are even more expensive than the typical ones. So when we see these loan apps and you see they charge ridiculous monthly fees and then their penalty rates are so high, people end up getting into this debt and they have no way to exit. And then you now even face the disgrace, the naming and shaming of calling your family and your friends, sending your pictures around. So that's another challenge. That firstly, don't take debt if you don't have to, and when you do take debt, ensure that there's a way that you can repay, and then ensure that even the debt itself is reasonably priced.
In case you're joining us now, it's Money Talks, and today on Money Talks we are talking about common money mistakes and how to avoid them. Smart Uzechi is my name, and I have Bina Kemenanabo, CFA, here on the program this evening. Don't forget, Money Talks is brought to you by CFA Society Nigeria. Before we leave this particular subject, Bina, let's talk about when people do not make provision for like retirement or ill health, as you have said. This is also a bad money mistake.
Yes. You're very correct, Captain Smart. So we've already spoken about ill health or other emergencies that can occur, but then not saving, or rather not planning, because it's not just a matter of saving. Not planning for retirement is also something that we find a lot of Nigerians are guilty of. I mean, before now, the only retirement plan that was necessary was train your children and give them the best education, and then they will take care of you in the future. But as the economy gets tougher and harder, even the most well-intentioned children who have been trained by their parents' hard work and sweat find themselves being financially unable to provide the sort of support that they would themselves like to. So, I mean, that's just to stress the fact that financial planning is something that you make a concerted effort of. It's not something that you just think, okay, no, I train my children and I will be fine, or that your pension will sustain you in retirement. Because even there are factors like inflation that may make that pension payment that you receive to not even meet your basic needs in retirement. So, you find a lot of people that perhaps you start planning too late for your retirement savings, or that you have a situation where you grossly underestimate exactly how much you would need, or how much you even rely on your employers for your day-to-day sustenance, so that in retirement you find a lot of people struggling, whereas these are your golden years that you should be enjoying, relaxing and kicking back, but then you find yourself looking for odd jobs and being more stressed in retirement as opposed to relaxing and then enjoying those years of your life.
You can call the number 0700-923-923-923 in case you have a question to ask, or you can call 0818-444-0923. There's also 0818-555-0923, or send messages to WhatsApp 0817-313-6193. Common money mistakes and how to avoid them. In case you have been caught up in any of these mistakes, you can ask Bina this evening, and he'll be ready to provide answers on how you can get out of them, or how you can avoid making these mistakes at all. So Bina, having discussed some of these mistakes, what do you think are the steps one can take to avoid each one of them?
Okay, thank you very much. We've discussed those challenges, and I think some of the solutions are actually quite simple. So the first thing is, as much as possible, you want to be able to create a budget, right? Which means at the start of the month, even maybe at the start of the year, you can list some financial goals. By the start of the month, you want to be able to say, these are all my income sources. So you have that on one side, the amount of money you have coming in. On the other side, you say, these are my expenses, and your expenses, you want to break them down into essential and discretionary expenses. So essential expenses would include things like rent, like utility, electricity bill. I think in this modern day, you can even say phone bill, internet, and then food, groceries, of course. And then you have discretionary expenses. So discretionary expenses will include entertainment, however, whatever that means to anybody. So entertainment, whether it's going out for dinner, going out for drinks, or stuff like that, or other leisure activities. These are essentially discretionary expenses that you don't need to undertake to survive. If you're somebody who is a bit cash strapped and you're thinking about how do I streamline my expenses, creating a budget will definitely help you gain insight of, this is how much I have, and then this is how much I need to survive. These are my essentials. So when you do that, you want to allocate your income to essentials first and foremost. And if you're fortunate enough in this current climate that after your essentials you have money left over, then what you want to do is you want to allocate money to savings. And then after that, allocate money to discretionary expenses if you can afford to do that. So that's on the first solution, I would say. Now, there are manual ways to do that, Excel, other ways, or you can also, there are budget apps that you can download online, but again, it's just, you can go through that process manually. So the second thing I would say is shopping smart and then avoid impulse buying. Now, you've already created a budget, you have a budget for groceries, and now you're going grocery shopping. There's also the trap there that before you go shopping, if you don't list the things you want to buy, A, B, C, D, E for the week, that you end up going there and perhaps blowing your budget on things that you don't necessarily need. The supermarkets are designed that at the front end of the supermarket is where you see sweet things, where you see chocolates and all these things that will catch your eye, and then you're buying things that you didn't necessarily plan for. So certainly you want to shop smart, create a shopping list, and then when you're making significant purchases as well, shopping smart entails taking advantage of seasonal discounts, right? Seasonal sales. If you want to buy electronics, televisions, whatever, a lot of people wait for Black Friday before they go out and splurge and buy some of these things. Just being a bit smart and a bit savvy about how you spend. Then the next thing I'll say is to build an emergency fund. We've talked about the habit of a lot of people not saving. So what you want is, the rule of thumb is you want to have about, say, 3 to 9 months of living expenses saved somewhere. And before you have that 3 to 9 months of living expenses, you want to ensure that saving and building up that emergency fund is a priority. So once you cut down and you take out your essential expenses, you want to ensure that you allocate money to saving and building up until that emergency fund, right? That way, if you do run into a legitimate emergency, you're not going to borrow and enter debt to take care of it, right? And then when you have that fund as well, you should be conscious. It's an emergency fund, it's not fund to emergency as should be. It's not that. It is fund to take care of emergencies. It's home repairs, car repairs, essential items. That's what we're talking about. The next thing is to plan for retirement. This, I think, is if you find yourself fortunate to have a small business or you're even in paid employment, perhaps you can speak to a professional. Most of us have PFAs. You want to speak to your PFAs and sit down, discuss what are your needs and requirements in retirement rather. What do you require? How much would you need to spend on? Is it healthcare? Is it entertainment? All these things. And then how much do you need to put away today for you to achieve that goal? You speak to a professional and then they can certainly help you to do that. For a lot of us, our employers will put money in our retirement savings account. You want to also make that effort to contribute to your voluntary contributions accounts as well. And then the last thing I would say in terms of being better at not making these mistakes is just to educate yourself on personal finance topics. There are lots of self-help books, there are podcasts you can listen to, radio shows like Money Talk. These are all things that you can take advantage of just to increase the amount of knowledge that you have about some of these issues, which are very critical and can lead to a better and healthier life and well-being.
And I'm very sure you're listening out there, so should you have questions, you can ask by calling the telephone number 0700-923-923-923. You can also send us messages on WhatsApp 0817-313-6193. Maybe there's something you do not understand in your notes that you're taking. You can just ask right here, and Bina will be ready to provide the answer. So Bina, as we begin to wrap up, let's drill down now on debt trap. You mentioned this earlier on. When you're talking about debt trap, how do people avoid or just extricate themselves from it if one is already in it now? Because many people are indebted to a lot of credit apps out there because it's very easy. Sometimes people just pick up their phones and these adverts just pop up in their faces. You can get 50,000 now, you can get 100,000 now, and these people are pressed for money. They take these monies before they realize even the terms and conditions. So how do they manage to get out of it?
Thank you very, very much for framing the question like that. So before we even go into the menace that we have of those loan apps essentially taking advantage of people, I want to speak firstly as to how you avoid it. And I think we've already spoken about creating a budget and all these other things. And I think that's how you avoid being in a debt trap, by developing healthy financial habits, right? By ensuring that you're managing your income in line with your expenses in line with your income. You're not living beyond your means. That's the first thing that would prevent you from needing to borrow money. The second thing is that when you do need to borrow money, you want to ensure that it is you understand the terms and the conditions. You're taking responsible credit, and you're not taking credit from these loan apps that are loan sharks, for want of a better term. So I think that's the best way to avoid healthy financial habits, taking responsible credit. Now, for those who are unfortunately already in a situation where you find yourself working for a loan app, so all the money you make at the end of the month is going to one loan app repayment or the other, I would say it's a very tough situation, but it's something that you can resolve with a lot of resolve. So the first thing you want to do is assess your debt situation. How much do you owe? What's the interest rates? Are there any penalty charges? Because those penalty charges could mean that if today you owe 20,000 and you don't pay tomorrow when you're trying to repay, you're owing 40,000. Because sometimes the loans are so poorly priced and just take advantage of people. So how much do you owe? What's the interest rates? What are the penal charges? Now, once you understand all of that, then you want to ensure that with your spending, you cut out all discretionary spending. once you make your money and you've allocated money to rent, to food, and all these other things, all the money has to go back to debt repayment. But then even how do you repay that debt? There are different strategies. You have to look, if you're owing several loan apps, for instance, right? Rather than getting five calls from 5 different loan apps at the end of the month, you can say, okay, let's pay the smallest ones first. So you pay the first 2 and then you're getting calls from only 3, right? Or it could be that when you've assessed that your debt situation, there's one loan app that has a very high and ridiculous penalty rate, so that if you miss one payment, the money is going to double. So that kind of loan, you want to pay it quickly and then focus on others. So it's about just being smart and understanding where you are and where you stand. Like we've already mentioned, cutting expenses. Discretionary expenses should not be in your budget. If you in your vocabulary, you can't have that if you have that debt that you're trying to get out of. And then a lot of people, the problem and the challenge is actually that the money is just not enough, right? So if you put yourself in that debt trap, I believe you're smart enough to get yourself out. Look for extra jobs, part-time jobs. What can you do to create value one way or the other and increase the amount of income that you have? If you can do that, then you're also one step closer to getting out of that debt trap. Then the last thing I would say is seek counseling, right? Whether it's from professionals, whether it's from friends and family, you want to open up, discuss with people. You may even find that some of your friends and family may be willing to give you money to pay off those high interest loans and then give you better terms to repay, right? And if I'm speaking for small loans, if it's for bigger loans, then you may find other companies that would consolidate your finances and then give you